Institutional money is flowing in. U.S. Treasuries are getting tokenized. Kraken's offering stocks on chain, and data is what will power the next phase of finance. Today, I'm joined by Marc Tillman, the director of Pyth Network, to break down what's happening across markets.
Stock trading, bond trading on chain.
Where oracles fit into all of this.
It is the necessary infrastructure for blockchains to be able to offer smart contracts.
And what's coming up next?
I wouldn't be shocked if we see...
Welcome to the show, Marc.
GM, thanks a lot for having me. Super excited to touch upon these hot topics today.
GM indeed. Yeah, it's an exciting time, obviously. Bitcoin has broken through. We're seeing record highs right now. Institutional money, as I mentioned, is flowing in. But let's start here. Why is Pyth Network so important, not just for crypto, but just for financial markets as a whole?
Yeah, definitely. So first, Pyth, let's say product is an oracle, specifically price feeds, so that it is the necessary infrastructure for blockchains to be able to offer smart contracts, so that you can do on-chain finance, whether it's a pure classic crypto AMM spot DEX, but also derivatives protocol where you can kind of take on directional trades, long or short on any asset. So very much like Pyth first is here to enable on-chain applications to power the infrastructure with the best financial data out there. And specifically like within Pyth, where Pyth, I think, is taking a different road than traditional crypto oracle network, is that we focus or care much more about more like data distribution, financial data distribution. It's something that it's still very not known by crypto participants, but it's pretty hard to get access to US stocks data, the Fed rate, all these type of financial assets. Like getting the accurate and pricing in time is super hard. And Pyth pretty much is more akin to like serve this purpose, like finding and sourcing the best data out there and making it available for people to build on-chain finance. So in the case of institutions, this has been a long time thing for Pyth, was to offer US stocks price feeds. So as of today, I think the Pyth network has close to 1,500 price feeds. Half of those are TradFi assets, like the top 600 US stocks are supported, or the Bitcoin ETFs, the US yield curve, the overnight secured funding rate, financing rate, sorry. So very much Pyth is kind of long-term goal is like the Bloomberg, providing a price feed for every asset on Earth.
You mentioned TradFi. JP Morgan just settled US Treasuries on the public blockchain. What do you make of that news?
So I mean, it's great. And it's akin to what we've seen with BlackRock and their Beetle fund, like using existing public/permissionless blockchain to issue an asset or fund or whatnot. So from this angle, I see it more as, I mean, it's testing ground. It's their first, I mean, there's already a billion or even more on the BlackRock Beetle fund, but it's still small numbers in the TradFi landscape. So right now, I think we mostly see kind of testing, like testing prod, let's call it, on public blockchain. And I'm kind of surprised, I'm positively surprised, because personally, I would have wagered that all these banks and other big financial institutions to also run their own chain, like have this full power over what can happen with their assets. Because up until now, like pretty much you can do nonsense with a bank transfer. It's always kind of easily revertible. On a public blockchain, it's almost impossible. So if BlackRock were to do something crazy, like lose keys, etc., for their fund on Ethereum, be completely lost. So it's pretty exciting to see them leveraging, this permissionless DeFi tech to optimize their infrastructure, reduce their cost in issuing funds, etc. But after we'll see also like the next steps, because It's great for creating funds, distributing, tokenizing funds. But the next step and the even bigger step will be what about trading? Stock trading, bond trading on chain. So that's, I think, the next big thing. I'm excited to see how it's gonna shape.
What do you think is the appeal for these large institutions to do it on a public blockchain versus, like you said, like having their own chain?
I would guess that, I mean, first, if you use someone else blockchain, whether centralized or decentralized, you don't have to do, like, it's much less work. Running your own, whether it's an app chain or blockchain, is a tremendous amount of work. Um, but the second aspect, I would believe that this whole DeFi on-chain composability is also what makes sense for them to go on a public blockchain. Like ourselves as, let's call us retail or DeFi users, we have 100, if not 1,000 yield opportunities for our stablecoins. And so, and with all the kind of crypto smart contract risk, it's like quite profitable. At least you get paid more yield than your traditional TradFi bank account, etc. So I think leveraging and going onto a public chain kind of also like attract these potential users, you and I mean, if we were accredited investor, we could maybe mint those assets. So think, yeah, one, attracting existing big crypto participant, and two, the product itself will likely be way more interesting, meaning higher yield, thanks to crypto increased riskiness compared to traditional assets.
It's interesting to see the network effect take its place because if it wasn't for the fact that these chains were so popular and there were so many users on there, they probably would just be using their own private blockchains. Now, Marc, Kraken is also in the mix. They're now offering tokenized stocks like Tesla, Apple, and they're doing this on Solana. How do you think this changes how we access and trade traditional equities?
It feels like, I mean, at this rate, it feels like we're going to compete, let's say, against Robinhood, or those platform whereby existing, I mean, any US person arguably could already get an easy access to stocks, some cryptos, etc. Seeing more and more tokenized stocks on chain or funds on chain, yield product, TradFi yield product on chain, just further push or further reduce the need to off-ramp assets back to the real life or back to the TradFi life. So I think it's going to be like, even personally, I barely trade stocks like on a Web2 platform, on a normal OG platform. If I would be able to actually buy Tesla or XYZ stock directly with stables on chain, have this on my wallet, you're going to grow your customer base. And people are on the high level salary or wealth. So I think here is a great angle of like people are committed to keep custody of their funds. They want their stables on chain. Enabling them to hold Tesla on chain and fully own that stock, be able to redeem it for a real share if they want, is immensely powerful. Like I'm 10x more likely to buy backed Tesla, to be Tesla on Kraken or directly on any DEX, rather than off-ramp X amount of USDC to my fiat bank account and then go on Ameritrade and buy Tesla.
And what kind of pressure do you think this is creating for the traditional markets? I've heard stories that NASDAQ may go to like a 22-hour, 7 a day type of format. I mean, we're sensing a little bit of pressure from the digital asset space onto the traditional markets. What are your thoughts on that?
Where crypto has a superpower versus existing traditional markets and infrastructure is that it's available worldwide. Like pretty much as long as you have an internet connection and a wallet, arguably you can get access to it by any asset at any time. So 24/7 access and such a big distribution or pool of potential user. So I was actually more afraid, like I was initially more afraid of Robinhood, like slowly kind of adding like the biggest crypto, etc. And you end up having more people actually fleeing the on-chain back to the off-chain world where Robinhood, you buy your stock and your crypto. But actually, now see the reverse, whereby crypto overall DeFi is way faster in onboarding new type of assets, completely new product. And so here it's actually kind of more vampire attack out of Robinhood, I feel, whereby why would you want to store all your asset on Robinhood servers while you could just have everything on chain distributed and available to you 24/7. So I think that's the big kind of reverse attack I was expecting. Like TradFi had all the distribution in the world, at least back then. Nowadays, whether you're in Africa, in South America, in Asia, you can now buy stocks on chain. While if you were in the 10 years ago, you would try to get an account on Robinhood, not possible. You'd go through your bank, you'd pay 10% fees on every trade. So distribution, way cheaper for everyone, and 24/7 is like the way to go. And how like we'll see how the volumes will come on these on-chain tokenized stocks, but the product is viable and should find PMF, I think.
You mentioned Africa. I mean, that's a continent where you have more people using their mobile phones than you have with a bank account. So it's a perfect use case for those that are living in Africa. So,
And another even, we could take the opposite example. Like, for example, Asian market, you have very tight capital control rules around it. Like, it's almost impossible to get money into Japan or Korea as a foreigner. And so also buying Korean stocks, Japanese stocks, also very hard and expensive. If we were to see those Korean stocks tokenized and available to all of us on XYZ AMM DEX or order book exchange on chain, like we'd be able to buy at a fraction of a cost and issue. So it's kind of also, it's both ways for the people, but also for the companies getting their shares/stocks to more people across the globe.
if money is flowing much quicker and cheaper with the use of blockchain technology, I mean, how do you think this would impact things like the yin carry trade, which I know is a really big topic right now in Japan, or does it impact that in any way?
I mean, for it to impact, so it can impact, I think, technically speaking. I don't think we're at the size and levels of the TradFi market. Like, even if you combine all blockchains in the world, it might be worth 2 trillion US dollar. TradFi market is still 1,000x bigger. So while product-wise, it will most likely bring benefits to what's currently existing in the TradFi world, we still do not have the weight to meaningfully impact it. But then over time, you'll see those companies that actually are doing this USD GPY carry trade might actually start moving some position on chain. If they, like in the end, if you manage to get less slippage, more features like 24/7, etc. I mean, FX is already pretty liquid and like in the traditional world. Like if there is like cost benefit and some other incremental improvement, I think we'll slowly see a balancing in between like 99% today is in TradFi, 1% on chain. So maybe in 5 years, it'll be 90-10. It can go fast, but overall, I'm trying to always tame my ambitions and timelines.
Definitely, but you're seeing the real use case here. And as of May, I believe we have about $7 billion in US tokenized treasuries. And we're projecting, well, some analysts are projecting that number to be 28 billion by the end of 2025. I mean, do you think that moves the needle, or is that just like a very small micro fraction?
I mean, I think it's still, number-wise, I think it's still a small fraction, but where I think from a product or feature side, I think it's on over the long term way more impactful in the sense that like crypto, I mean, usually it's this 4-year cycle. Hopefully you buy low, you sell high. And when you're lucky and you sell high, you have all these stable coins, and usually you either off-ramp them or lend those in borrow lending protocol, which have smart contract risks, plenty of other risks. But in practice, we're seeing many people end of the cycle or even later on just exiting, off-ramping, removing liquidity from chains back to the traditional world. Now with more and usually buying UST bills, this safe 4-5% paid paid over year. Nowadays with Ondo USDY, with bunch of other yield-bearing stablecoin that either tap into USTB or other TradFi yield, arguably you have way less reason to off-ramp to reduce that liquidity on chain and just like pivot into on-chain TradFi product. So I think the 30 billion by end of this year is not shocking to me. Like 4-5x. I mean, things can go pretty quickly, but I think it's going to be way bigger next cycle. As in, I won't need to redeem 10 billion Tether and just get 10 billion back in my bank account. I'll just be able, all right, I mint USDY and I have Ondo kind of forming this US yield rate for me on chain. So not net new capital per se, but way less leaking capital, I would say.
You mentioned something earlier about managing your own expectations. And let's be honest, there is a lot of hype around tokenization. So, like, what are some of the red flags that you're seeing? Like, what doesn't work yet?
So where I would have to be convinced, I think, will be those. I mean, this cycle, the past 2 years were very like you can spin up new blockchain super easily, and we've seen a few like real world asset RWA focused blockchain. Maybe they will succeed. I think they will only succeed if they're backed by banks like JP Morgan, a cohort of bank creating their own blockchain, like RWA focused chain makes sense, and they have all the weight. If it's like a crypto team, and the tech could be amazing, but a crypto team coming up with, okay, we'll make this chain RWA focused, they'll have so many nice features. Arguably, if you don't get that distribution, if you don't get buy-in from those banks, it's kind of useless. So things sadly on the RWA/blockchain world, and in terms of actual like usage and growth, I'm more expecting those centralized, permissioned, bank-made chain rather than, and I don't want to throw some RWA-focused chain under the bus, but some more recent project like this where, like, the idea is great, but it's the end of the day, it's crypto's not different than Web 2. It's distribution, distribution, distribution. Who owns the fund or the users owns the like all the power.
Purpose-built chains seem to be the new trend, but to your point, I do believe that we need some validation from the traditional world, which is so ironic. We wanted to escape the traditional world, and here we are trying to work hand in hand with them on, increasing the adoption of our technology. But that's how it works sometimes. Marc, what's the latest with Pyth Network, and what should we be watching out for next?
So few things. Overall, and I mean, I mentioned a bit in the Pyth intro, is more and more like Pyth has been around the block, been 4 years, like Oracle available on 100 plus chains, 1,500 price feeds now. But more and more, we've noticed that, like talking to end user and mostly protocol builders, that the infrastructure itself is not that, like there is not a ton of value on the infra part. Where there is value in terms of the Oracle is the pure data, streams of data. So very much now focus on Pyth is 3, 4, 5xing by end of year the number of assets tracked with price feeds. So from 1,500, we want to be over 5,000 by end of year. The year after that, 10,000. Very much kind of the next day. I mean, it's the short-term goal because you always need to continuously add to meet your long-term goal. But idea, yeah, to have every asset on Earth has its own Pyth price feed so that whether you do finance on-chain, off-chain, you can consume that. So big push around this, listing as many price feeds as possible, and especially and timing well with this RWA stocks narrative. We've been, the Oracle now supports like outside of US markets. So we have the top 50 or 100 FTSE companies, so from the UK. We have the top 40 or 50 Hong Kong companies, like the Tencent, Alibaba of the world. So very much Pyth price feeds product today is, I'll call it business as usual now, like as it fits the strategy, is keep onboarding new assets, crypto, stocks, ETFs, you name, FX, metals, etc. The other angle, Pyth does also offer more than price feeds, specifically two other products, one called Entropy and one called Express Relay. Entropy is just like, it's a randomness protocol, so it's more into like GameFi, lottery game. We've actually seen, it was launched less than a year ago, and we've actually seen decent usage, decent growth. If you know Infinex, they have like a trading card game where you can daily draw cards. It uses Entropy, a Pyth randomness solution, and pretty much I think they do 60K randomness requests per day. So overall, we've built in a short amount of time a very scalable randomness protocol that we didn't spend time much on it, selling it, building it, but that works. So nowadays, it's also kind of how can we 10x the usage, downstream usage. So V2 coming soon for Entropy, which will make the DevX life way easier, way better for end users. So yeah, so keep enabling those GameFi lottery apps as much as we can. And Express Relay is, if you know Cool protocol, it's overall cow protocol on Solana, meaning it's a intent protocol where you have trader signaling intent to trade X for Y, and you have searchers bidding on who will provide you the best fills. This was initially used by Camino Swaps for limit order, and now we have this Pyth Express Relay integrated in all the Solana venues. So if you go trade on Jupiter, if you go trade on Titan, on Camino, there is a chance that the trade, the liquidity doesn't actually come from on-chain pools, but rather Express Relay searchers like Wintermute, Caladan, Toka Labs, etc. And so yeah, on this one, big focus on improving the searcher's life also, because now that we have distribution for Express Relay, you have more bids and you have searchers that can be more competitive. With more volume, you can be more competitive. So we're trying to improve that, and trying to manage these three verticals well, and keep kind of iterating every week. Right, it gets better. Once in a while, you get a big new upgrade. But yeah, and back to price feeds. I mentioned getting to 10,000 price feeds, but also reducing by 100x the frequency. Right now, the piece price feeds update every 400 milliseconds. Goals to have this at 1 millisecond. Because if we want TradFi to do finance on chain, whether it's a centralized chain or permissionless chain, they want data to be flowing as fast as possible. And we have to have the Pyth infrastructure ready for that.
I mean, you guys have some pretty big goals, but you almost need to have those goals if you're going to have that convergence that we're all excited about and expecting. Marc, where can people follow along the journey on Pyth Network and also yourself?
Yep, definitely. So website, pyth.network. On the footer, you'll have all the links to all the socials, Discord, LinkedIn, Twitter, Telegram. You also have the docs. Everything you need to use Pyth is linked at the bottom of the website. Everything is permissionless when you use Pyth, so you don't need to hit up my email or whatnot to get data access to use the randomness protocol. You can just visit docs.pyth.network and get started. If you have questions, we now have you can come into Discord, our Telegram channel, but we also have a forum, a dev forum, dev-forum.pyth.network. Any issues, any questions, shoot it there. There might actually already be answers, your answers, but asked by someone else before there. And yeah, that's myself. I mean, Marc Telment on Twitter. I think it's KemarTT, so it's a bit the French slang of the first name, the reverse way. But you can also find me and the whole Pyth Data Association team on the website pythdata.association.com.
Perfect. I'll be sure to include those links. Marc, before I let you go, I have to ask a fun question. Give me your bold prediction for 2025. What's something that you feel people are still underestimating?
I wouldn't be shocked if we see a 1 billion derivatives volume on a stock pair this year. Whether it's Hyperliquid launching a SPY perps or XYZ application launching a SPY perps, I would bet that before the end of this year, we have a single day with 1 billion of trading volume has been done on a TradFi asset. This could signal big things to TradFi people, like showcase how big's the interest to trade this on chain. I'm trying to summon it into real life. So yeah, insane volume on stocks on chain.
Well, whether or not your bold prediction comes true this year, the fact remains that it's an exciting time for the industry and what's to come for the rest of 2025 and beyond. So, Marc, this was a real pleasure. Thanks so much for coming on, and hope to have you back here soon to give us an update on what's happening with Pyth. But for those that are watching, if you found this video helpful, please consider subscribing, like the video, comment what was your favorite part, and also give Marc and Pyth Network a follow. Until next time.
Thanks for having me.